first instance, the purchases manager received 4,000 through the cashier in the bank. The second instance, $700 was received through the cash office. And finally, $75 goods was received through Mustafa. The mentioning of Mustafa's name here shows that the goods was purchased on credit. That is personal account. Mustafa represents payables or creditors or suppliers that sold goods to us, Victory Enterprises, on credit. In the same way, we locate Mustafa's account and have that account credited. So Mustafa's account, representing the supplier, has been credited with $75 goods given to Victory Enterprises Purchases Manager. You can see the destination of the goods to purchases account. So it shows that the actual account that collected the goods of $75 was purchases on January 28, 2021. It shows that the destination of the goods of $75 is to purchases on January 28, 2021. These accounts are personal accounts, and no transaction here involves the cashier or the cash book because the goods was purchased on credit. Therefore, the cash book is not involved in any way. The two accounts that are involved are the person that the goods is being purchased from, that is Mustafa, and Mustafa is credited for giving out goods valued at $75. Therefore, since the goods was sent to purchases account, the purchases account has already been what? Debited. That obeys the double entry principle in respect of credit purchases. January 29th, purchased furniture with check, $1,700. Now, money is involved and the cashier is involved in this instance. What are we purchasing? Furniture with check. Therefore, the cash account or the cashier will be credited with $1,700 given out for the purchases of furniture, while the furniture account will be debited. It should be noted that when we mention purchases of goods, we are referring to the goods that the business buys and sells. But now we mention purchases of furniture. The furniture does not constitute the goods that the business buys and sells. Therefore, a separate account known as furniture account will be opened. We have already opened furniture account. So now that we are purchasing furniture, furniture account will be debited while the cash book will be credited for giving out cash for the purchase of furniture. So we debit the furniture account with $1,700 paid out by the cashier through the bank on January 29th, 2021. If you observe, the first furniture was introduced by the owner of the business represented by capital, while the second furniture of $1,700 was paid for by the cashier through the bank. We mean that the cashier in the bank paid out money by check for the purchase of this furniture. And when we mean that furniture of $1,300 was received by furniture account through capital, we mean that the owner of the business brought in furniture. He did not bring in cash for it through his cashier or check through his cashier in the bank, but personally brought in wooden furniture for the business to commence. So the two-column cash book or the cashier will be credited for giving out $1,700 for the purchase of furniture on January 28, 2021. If you watch, on January 2nd, goods were purchased with check $4,000. The cash book was credited with $4,000, giving out because of purchase, given out because of purchases, while the purchase account was debited with bank because the money was received through the bank. On January 28th, there was purchase of furniture 1,700. It was furniture that was purchased. Why didn't we write purchases here? Because the goods that have been purchased has been mentioned. That is furniture. What it shows is that furniture is different from the goods that the business buys and sells. When you mention purchases, it means the goods that the business is buying and selling. But when we mention furniture here, what it shows is that they have purchased furniture into the business, which is different from the goods they usually purchase and sell. Purchases in general implies goods of various types that the organization, Victory Enterprises, usually buy and sell. So whenever goods that are different from goods that the business usually purchases are bought with cash or with check, the name of such goods will be mentioned to show that it does not represent the goods that they usually buy and sell. So any asset that is purchased with cash or with check, the name of such asset will be written under the particulars column, representing the asset purchased and not just written as purchases. So having posted all the transactions to the appropriate ledgers, complying with the double entry principles, we are now going to balance all the accounts. We are now going to balance all the accounts. To balance the accounts, the first thing we do is to consider the debit side and the credit side of all the accounts. Now we add to see the difference. If the balance in a particular account is just on one side, we add the total that will enable us to carry out our balancing in such account. However, if the records in a particular account are on both the debit side and the credit side, then we must find out the total on the debit side and the total on the credit side so that we can find out the difference and use that as a base for our balancing. So the first thing we are going to balance is the cash book. If you watch, the receiving side or the debit side of the cash book has cash column and bank column for receiving cash and for receiving check. Also on the credit side, we have a cash column and a bank column for paying out cash and for paying out through check. Now the first column we are going to balance will be the cash column. So we add the total cash received and add the total cash paid out. So if we add the total cash received, we have 7,000 plus 450 plus 700. That gives us a total of 8,150. That gives us a total of 8,150. Then if we add the payment side, we have cash paid out 100 plus 150 plus 50 plus 700 plus 200 plus 150 plus $1,200. That gives us a total of $2,550. Now the greater side is the receiving side, which is 8,150. So we put it under this box where we have closed the account. And then the payment side has a smaller figure of 2,550. So we have 8,150 total cash received minus total cash paid out 2,550. The difference becomes the closing balance. That is balance carried down. That will be $5,600. As at January 31st, the balance carried down, which is the closing balance, will now be 8,150 total cash received minus 2,550 total cash paid out. That will now give us a balance carried down of 5,600. Now the balance carried down is 5,600. That is closing balance as at January 31st, 2021. That is abbreviated CD. C/D, which means closing balance as at 31st January 2021. Now, to balance the bank column, we have total money received through check that went into the bank, 10,000 plus 1,500 plus $1,200. That gives us $12,700. Then if we add the total money paid out through the bank, that is with check, we have 4,000 plus 500 plus 80 plus 700 plus 1,700. That gives us 6,980. So we have 12,700 total money received inside the bank minus 6,980, which is total money paid out through the bank. Then the balance carried down becomes 5,720. We use the same balance carried down line to form the balance carried down of the bank column, since they are both on the same side. So the total balance carried down for the bank column is 5,720, while that of the cash column is 5,600. This represents the balance of cash and the balance in the bank that the cashier is expected to give out so that the account can be balanced at the end of the period. Then, since the balance carried down is on the credit side, we take the 5,006 directly under the cash column. Then we take the 5,720 directly under the what? Bank column, and it becomes the balance brought down for February 1st, 2021. That is the opening balance. So we have February 1st, 2021, balance brought down for the cash column is 5,600, and balance brought down for the bank column is 5,720. Remember that it's the balance carried down on the credit side that forms the balance brought down at the beginning of the next month. This represents the amount that will be given back to the cashier at the beginning of February. Thus, it was debited. Of course, January account has closed with the use of this line. This double line shows that the account has been closed for the period. You can see it is the same straight line for this same. Note that it is this balance carried down on the credit side of the cash column that now goes to the debit side of the cash column to become the opening balance or the balance brought down for February 1st. The same with the balance carried down for bank column. 5,720 is taken directly under the closing balance for January 31st, and it becomes the balance brought down for February 1st. These two amounts represent the amount that will be given back to the cashier in the cash office and taken back to the bank column so that the business can begin for February 1st. Of course, we can now delete these figures as you are not required to show these total balances in the examination. To balance the two-column cash book, we are going to consider the cash column, the receipt side, and the payment side. That is the debit side and the credit side. The total cash received during the period is 7,000 plus 450 plus 700. This gives 8,150. Then the total cash paid out, shown on the credit side, is 100 plus 150 plus 50 plus 50 plus 700 plus 200 plus 150 plus 1,200. That gives us 2,550. You can see that the debit side is greater, and that is why we brought down the balance directly at the point of closing. This line goes the same for closing the account and also for closing the account here, because we already know that the total cash received is greater than the total cash paid out. Now, having added the cash column, the total is 2,550. So we now have 8,150 total cash received minus 2,550 total cash paid out. We now have a closing balance of 5,600 to be shown here as the balance carried down. That is closing balance, CD. This is at January 31st, 2021. So the balance carried down at this point will now be 5,600. Now if you add 5,250, that is total cash spent, plus the balance that the cashier is giving out for balancing, which is 5,600, it will still give us 8,100. That is 5,550 plus 5,600 gives us 8,100, which now becomes equal to the total cash that was received. So the total cash that was received must be equal to the total cash spent plus the balance of cash at the end of the period. The total cash spent is 2,550, while the balance of cash at the end of the period is 5,600. If you add the two, it gives us $8,150. So to balance the bank column, the total amount received through the bank or through check is 10,000 plus 1,500 plus 1,200. That gives us a total of 12,700 total received inside the bank. Then we add the total paid out from the bank, which gives 4,000 plus 500 plus 80 plus 700 plus 1,700. That gives us $6,980. Now, total receipt into the bank, 12,700, less total paid out through the bank, 6,980. It now gives us a balance carried down of 5,720. So we have 5,720 as the balance carried down for January 31st, 2021. Of course, the balance carried down is controlling both the cash column and the bank column. Then if you add 6,980 total amount spent or given out through the bank, plus the balance that remains with the cashier, that the cashier is bringing out so that the account can be balanced, 5,720, it will give us 8,150. So 6,980 plus 5,720 gives us 12,700. That means that the total received inside the bank must be equal to the total spent from the bank plus the balance remaining with the cashier at the end of the period. It is credited because it's assumed that the cashier is giving out this money, this and this, for balancing. And it is called balance carried down, CD, representing carried down. So we add these two to get the balancing figure. And note that we use double line to end January transaction. Once double lines are used, it means that the transaction for the period or for that operation has ended. Now, since we are putting the balance carried down as 5,600 under the cash column credit side, our balance brought down goes to the debit side under the cash column, and that becomes February 1st, balance brought down becomes 5,600. That is exactly this figure here on the credit is taken to the debit side. The implication or what it means is that at the beginning of February, 5,600 will be given back to the cashier so that the business can commence. Of course, at this point, this is not capital introduced, but a balance brought down from the previous accounting month, January. The same is applicable for the bank column. The balance carried down is 5,720. This same amount is taken to the debit side of the bank column after the closing of January operation, and it is called the balance brought down. Opening balance brought down. That is at February 1st, 2021. Now, to balance other accounts, we start from the capital account. We add the total amount on the credit side. 7,000 plus 10,000 plus 1,300, that gives us $18,300. We add furniture account. The total amount is 1,300 plus 1,700, that gives us 3,000. For purchases account, the total is 4,000 plus 700 plus 75, that gives us 4,775. For the sales account, which has a credit balance, we add 1,500 plus 450 plus 90, that gives us $2,040. For the rent account, it just has 500, so we bring it down $500. For the stationeries account, $100 on the debit, we bring it down. For the traveling expenses, 150 plus 150 gives us 300. For the hire of plant is 50, we bring it down. For drawings account, it's 200, we bring it down and close. Then for wages account, we have 80 and we bring it down. For mark account, we have 90 on the debit side, we bring it down. Then for Mustafa account, we have 75 on the credit side, we bring it down. Then once we have known the total balances, to balance this account, we make the two sides to be equal. In the cash book, the two sides has records. So we look for the side that is bigger and initiate the balance carried down on the smaller side. But in these other accounts, the balances are just located on one side. Like you can see, in Mustafa account, it's on the credit side. In Mark account, it's on the debit side. Capital account is on the credit side. Furniture account just on the debit side. Purchases on the debit side. Sales on the credit side. Rent on the debit side. Wages on the debit side. Drawings on the debit side. Hire of plant on the debit side. Traveling expenses on the debit side. And stationaries on the debit side. Now, since these balances are on the debit side, to balance the accounts using the balance carried down, we must make the two sides to be equal, just like we did in the cash book. Now, for the capital account to be equal, this side is 0. We bring the 18,300 and paste it here, and the two sides becomes equal, because 18,300 minus 0 gives us 18,300. So simply put, to make the whole account to have its balance CD, the total amount at the debit side is brought to the credit side so that the two sides can be what? Equal. For a credit account, the total amount on the credit side is brought to the debit side to make the account to be what? Equal at the debit side and at the credit side. And this equality will be initiated by the balance carried down. So we are going to do it in all the accounts. Initiate the balance carried down by making the two sides of the account to be the same. To balance the capital account, we added every figure here. It gave 18,300. We closed the line, the same direction. We brought the line here. Then, to have our balance CD, the two sides has to be the same. So we took the 18,300 as closing balance of capital, and we called it balance carried down. And that should be by January 31st, 2021, under the assumption that the account will be closed at the end of the month. Then this 18,300 was also brought down here to be in the same line with this and also closed. Then finally, this same figure that is the balance carried down at the debit side of capital account now becomes the balance brought down at the credit side, 18,300. And that should be by next month, February 1st, balance brought down, which is the opening balance for February 1st. So for the furniture account, we added the total balance is 3,000. So to make these two sides to be equal, we added the total balance is 3,000. To make the two sides equal, we bring the 3,000 to the credit side, which becomes the balance carried down as at January 31st. And this balance carried down is also brought back to the debit side under the closing account as balance brought down for February 1st. For the purchases account, the total figure on the debit side is 4,775. To get the balance carried down so that the two sides become the same, we transfer this 4,775 to the credit side, and it becomes balance carried down for January 31st, 2021. Then this same figure is brought down and closed. Then to get the balance BD, this 4,775 is transferred to the same debit side, 4,775, and it becomes the balance brought down, that is opening balance for February 1st, 2021. The sales account, the total balance is on the credit side, 2,040. To make the two sides to be equal, this 2,040 is transferred to the debit side, and it becomes the balance carried down for January 31st, 2021. And this same 2,040 is also taken back to the credit side under the closed figure and becomes balance brought down for February 1st, 2021. For the rent account, the total on the debit side is 500. This 500 is taken to the credit side and becomes balance carried down for January 31st, 2021, and also brought down in the same line with this and closed. Then, to obtain the balance brought down, this 500 is taken to the debit side as balance brought down for February 1st, 2021. For the stationery account, the balance is 100 on the debit side. This same 100 on the debit side is taken to the credit side and it becomes the balance carried down for January 31st, 2021, and then brought down in the same line with this closed figure and closed here. Then the 100 is taken back to the debit side under the closed account and becomes the balance brought down for February 1st, 2021. For traveling expenses account, the total amount on the debit side is 300. This 300 on the debit is taken to the credit so that the two sides become the same, and it becomes the balance carried down for January 31st, 2021. Of course, this 300 is brought down in the same line with the closed figure and closed. Then to get the balance brought down, this 300 is brought back to the debit side under the closed account and becomes the balance brought down for February 1st, 2021. For hire of plant account, the total on the debit side is 50. This 50 is taken to the credit side and becomes the balance carried down so that the two sides becomes equal. on January 31st, 2021. And this 50 is also brought down in the same line with the closed figure. And the 50 is also taken back to the debit side and becomes the balance brought down for February 1st, 2021. The drawings account has its total figure as 200 on the debit side. This 200 is taken to the credit side so that the two sides becomes equal and is called the balance carried down, that is closing balance, for January 31st, 2021. This 200 is brought down in the same line with this closed amount and also closed. Then the 200 is taken back to the debit side under the closed account and called the balance brought down for February 1st, 2021. For the wages account, the total amount on the debit side is 80. This 80 is taken to the credit side and called the balance carried down for January 31st, 2021. Also brought in the same line with this closed figure and closed. Then this same 80 is taken back to the debit side under the closed account and called balance brought down for February 1st, 2021. Mark account, a receivable account, has its balance on the debit side 90. This 90 is taken to the credit side and called the balance carried down for January 31st, 2021. And this 90 is brought down in the same line with this closed balance and also closed. And the 90 is taken back to the debit side and called the balance brought down for February 1st, 2021. Mustafa account, which is a receivable account, has its total figure 75 on the credit side. To balance the account, this 75 is taken to the debit side and called the balance carried down for January 31st, 2021. And they're brought down and closed in the same line with the one on the credit side. Then the 75 is taken back to the credit side and now called balance brought down, that is opening balance, for February 1st, 2021. We have prepared the various accounts, posted to ledgers, and balanced the accounts. Remember, we are still in our foundation stage in accounting principles. We are going to go over to prepare the trial balance in respect of these two-column cash book. To prepare the trial balance, what we should do is very simple. Look at each of the accounts, including the two-column cash book. If their balance brought down is on the debit side, transfer them to the debit side of the trial balance. And if any account has its balance on the credit side, transfer the balance on that account, which is the balance brought down, to the credit side of the trial balance. So the first balance we are going to be collecting is the one from the two-column cash book. If you watch, the balance brought down of the two-column cash book, both balances are on the debit side. For the cash, it is 5,600 debit. For the bank, it is 5,720 credit.